Okay, so the Bank of Canada didn't reduce interest rates again. Should we be worried? We think it's time to look at the positives of this decision because the Bank of Canada only adjusts interest rates downwards during economic stress such as slow growth. So despite all the trade war stuff going on, we're seeing some good things happening with the economy, like 2 straight months of downward unemployment. The bank stated that the current policy rate is at about the right level to keep inflation close to 2%, while helping the economy through this period of structural adjustment. If that outlook changes, they're prepared to respond. Interest rates were cut 4 times this year, ending 2025 with a benchmark lending rate of 2.25%. We still have to get through December to see what the real estate market experienced, but we can tell you that new listings and average selling prices were down in November year over year. That makes sense considering there were hopes of a final rate drop, and that confidence is still iffy on the long-term employment front. But with encouraging news on jobs and the economy, TRREB President Elechia Barry-Sproule said that kind of positive momentum can help strengthen consumer confidence. TRREB Chief Information Officer Jason Mercer also sounded hopeful, pointing out that maybe the Canadian economy is weathering trade-related headwinds better than expected. Fingers are crossed. He also says the positive economic impacts of recently announced infrastructure projects could improve homebuyer confidence moving forward. All this boils down to the fact that homebuyers are currently benefiting from a well-supplied resale market, reduced home prices, and reasonable borrowing rates. And if you're thinking of holding out for the next rate reduction, some experts predict the Bank of Canada will leave the override rate at 2.25% throughout 2026. So acting sooner than later will allow you to take advantage of your negotiating power to get the best possible house in a more desirable neighborhood. But only act if your finances are in order and your job is secure. Homeowners hoping to sell continue to be the ones suffering the most. Assessing your current home value, finances, and personal situation will help you decide if selling now is a must. If you can bide your time and wait to see if the market starts to correct itself in the new year, you might feel a little better about your prospects. Also, always keep in mind that in theory, you only lose money if you sell when your equity is low and the current value of your home is underwater. Hopefully that's not the case and you have some flexibility to time your listing right. Look, if you're feeling uncertain, like we know a lot of people are, we are here to chat anytime. As always, no pressure. Whether you're buying, selling, or want to pick our brains, just email us at hello@christinecowern.com or call 416-291-7372. Thanks.